Hi everyone, welcome back to this series of Amibroker tutorials and trading systems. Thank you very much for joining me. It is really great to have you here checking this out with me today. A few people at my site have requested the Amibroker Formula Language for the $3 billion trading system, day trading system that we looked at last week that was based on Tony Crabel's opening range breakout. Really cool pattern, and although it's not as effective as it was in the 70s, 80s and even 90s, it's still, we found that it did actually come back in the last couple of years, and that generated a bit of discussion, which was really great to see as well. But what we're going to do, I'm going to show you how I actually coded that, because there's a few great things, that will take your Amibroker Formula Language to a new level as well. And also, there was a great comment by Janusz at my site. Janusz, I hope I have pronounced that correctly. I apologize if I haven't. And Janusz said that he got slightly different details or slightly different outcome using the sell with price on close. Now, I was doing exactly the same thing. However, there was one mistake that I did make, and that was in my analysis and my settings of my backtester. I actually had the trade delay set to the next day, so it was actually selling on the next day, and that actually had a bit of a positive effect on the trading system over that 50-year period. So that was pretty cool. What I'm going to do in this video is show you how I code it into the actual code itself. So the trade delays I'll put in the actual formula. That way I won't make that mistake in the future, and no one else will either if you're following along. So let's jump straight into it. First of all, we go to Analysis, Formula Editor, and that brings up the sheet of paper that we're looking for so that we can start the code. And obviously, the first thing I'm going to do is just set up the trade delays. Now, that's a setting. You can set almost any of your settings within the code of your formula language, and I highly recommend that you do. Now, it's got set trade delays, and then it tells you what we're actually looking for. The buy delay, I'm going to have 0, so it'll buy on the same day that we get the signal that we set up. The sell delay, I'm going to have the next day, which is 1, and short and cover we're not looking at, so we'll go 0 and 0 there as well. Close that off with a semicolon, and then we can get to the real bulk of the code. Now, what I'm looking for is a precondition. Now, what I'm doing here is just setting up an array. You can call this anything you like. I'm just running with the flow of my code, so I'm going to call it the precondition for the trade setup. Now, that is that we have the narrowest range in price of the last 7 days. So in other words, this bar here is narrower than the average of the last 7 days ranges. And that's quite easy to do using a very simple tool called average true range. So it's the symbol for it is ATR. It turns blue, so Amibroker recognizes it, and we open up our bracket. Now the range we want is, let's start with just that 1 day range, because we want the 1 day range to be less than the range of the last 7 days, or the average range of the last 7 days. So how would we do the average range of the last 7 days? ATR, open up our bracket, 7. Very simple stuff. Close that off with a semicolon, and so now we have our precondition ready. Now the next thing we want is to tell Amibroker when we're actually buying on the day, or when we're passing on the trade for the day. Now, when we get this precondition here, the price on the day has to trade above that high of that precondition bar. Now, we spoke about this last week, but the way that we actually code that is just using a little function called the ref function. Now, I'm just going to call this move up, and again, you could call this anything you like. It's just an array that we create, so we're the creators here. We have the power to call it anything we like, which is really great. But what I want, as we said, is for the high, which is just H, or you could type in high as well. It really, both of them will work, but we want the high to be greater than, and this is where we refer to yesterday's bar. So I'm saying ref, and that turns blue. I open up my bracket, and we want the array, which is the high of yesterday. So the high, and yesterday being minus 1 day from today. So that's the shift that it talks about there. And I'll just open that up again. There we go. So you can see that's the array, the high. So we want today's high to be greater than the high of yesterday's bar which will be our precondition bar. Now we'll have to use ref again in just a moment, so make sure you keep a watch out for that, because now we have set that up. We can actually set up our buy and sell rules. Now when we type in buy and sell respectively, they both turn bold, and that means that Amibroker recognizes it, and that's happy days. So we can use it and go forward from here. Now, as we said, it's today's high is greater than yesterday's high, but yesterday's high has to be that precondition bar. So in other words, that precondition bar, we want that to happen yesterday. So how do we make that happen yesterday? We refer, ref, turns blue, open up our bracket, and the array that we're looking for is that array that we set up, which is precondition, and the shift we want is to yesterday, which is -1 day or -1 bar, whatever you're looking at. So we want yesterday's bar to be the narrowest range of the last 7 ranges, and we want today to have its high greater than the high of yesterday. In other words, it's moving up. And that's the array that we created here. We just close that off with a semicolon, and that is happy days for our buy setup. Now, the only other thing we have to do is play with our buy price. The reason for that is I've set up the buy price. You can see it. It's just the black dots on these bars. So the solid green arrows are where the system is buying, and the buy price is just marked in. I've marked that in with those black dots there. Now, what that means is if it opens below the high of yesterday, but then moves up over the day, then that's where our buy signal actually is. That's the trigger point, in other words. So we have to tell Amibroker that that's the real trigger point, and we do that by saying buy price. Now it turns bold, which is great, and if we just say equals, then we can play with our buy price from here, and we can set that up. Now what I want, because what happens if the price actually opens above the high of that day? So we have to take a few different things into consideration, and I'll just see if I can get all of this in the one pane. There we go. So that will actually help a little bit. So we either want it to buy at the high of yesterday's bar, or the open if that's higher, because we don't want to be cheating in our code. That's very important, otherwise we'll be getting the wrong outcome in our back tests. So to do that, we want to buy the maximum, which is MAX, and the maximum of yesterday's high. So how do we do yesterday's high? We refer to it, which is ref, open it up, the high array, and yesterday, which is -1. The maximum of yesterday's high, or the open price, and that's just O. And again, you could type in open, both of them turn bold, and that's happy days. And if we close that off with a semicolon, with a bracket and a semicolon, that should do it. Now in my code as well last week, I did add just a tiny little bit of slippage. In other words, I multiplied that by 1.001, because with the S&P, a 1% move, can be a decent move over the day. So I made it 1/10 of 1%. I know it's not a lot, but at least that did add a little bit of resistance to our trading code as well, so that we made sure that we weren't cheating again, and that slippage was sort of taken a little bit into consideration. Now we come to our sell price or our sell condition. Now the sell condition is simply the same as our buy condition, because originally there's 2 ways we've set this up. We want it to sell as soon as that buy condition is triggered. However, we're setting our sell price to be the close of the day. Now think about what it's doing here as well. It's got the sell price as the close, so it's either going to sell on the same day we get our buy signal, or if we have a trade delay set to 1, in other words, the day after our buy signal, then it will sell on the close the day after we get our buy signal. So it's a pretty cool way to do it, and it's a little bit of fun as well. There's a few other things you can do in here, guys, and that is what I did as well is just say sell equals xrem. So I removed the excess signals for the sell signals, because when I plotted them on a chart, I got sell, 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 just for the sell arrows, which I didn't really want. It didn't have any detrimental effect to the trading system. However, it just didn't look right when I plotted it on the chart. So I don't want any sell signals until I get another buy signal. And that's very simple. We close that off with a bracket and a semicolon, and that just gets rid of it removes any of the excess sell signals that we've got there as well. Now if I save that And if we go to our back tester, which is just under analysis, you've got the new analysis or the old automatic analysis. Either one is fine. I like this one because it floats around a little bit. It makes it easier on myself. I'm sure there's an easy way to do it, guys. If there is, feel free to leave a comment. I love hearing from you. And so if we actually take that just on the current symbol, which is the S&P 500, from 1965 to today, do a quick back test, then the report we get, it comes out with 33% per annum and ends up with $120 billion, I think, from a $50,000 portfolio. Now, why is that different from the $3 billion that we looked at last week? Now, I'll show you why, and it comes down to that slippage that we were talking about. So remember our buy price, and I multiplied that by 1.001, which is a tenth of a percent. Now, that tenth of a percent, it might not seem much, but if we run that back test again, you'll find that in the actual report, it comes up, instead of 33% per annum, it's 24% per annum. And that's where we come to our $3 billion right at the end of that, around about 50 to 51 years on the S&P 500. Now, of course, you can do things like plot this on your trading, in your code as well. What I have here is just a few different plots. You've got plot shapes, which is the precondition arrow. So I had a few things there. So I hope that helps you guys. There's a few new things in there and a few really cool ways to structure your code. Thank you so much, Yanush, at my site for pointing out that difference there. I really, really appreciate it, and it's great to have that conversation and that discussion there. Really, really cool. Guys, stop by the website. It's asxmarketwatch.com. A whole bunch of free stuff, free trading systems, free trading courses, free coding courses, and all of that stuff is really great. Good comments from great people there as well. It'd be great to have you there. Guys, have a great week ahead. Happy trending until we meet again, and bye for now.